Nick Bennett tonight, and good to be here for Property Fast Track. Charles Tarbey, good evening, sir.
Good evening, Nick.
Welcome to the show.
Thank you very much.
You've had a big day.
I have had a big day. Lots of heavy meetings today, and the marketplace is interesting all across the Australasian region. It's very different everywhere you look.
Good stuff. You would have picked up some great advice today and some insights, which you're also taking to the TV tonight, Sky Business News.
Yeah, we're talking a lot about the differences in the capital cities, especially in terms of gains and losses. Most of the people across the country overall have had a pretty good win when it comes to capital growth. They've been a small percentage, 9.6% of people that have actually lost on property.
Okay.
And I guess that's not too bad a figure. I mean, you don't like to see anybody lose, but there might have been circumstances where they might have sold even cheaply to buy something better, who knows. But the reality is that the majority of people have done very, very well out of real estate.
All right, good. We'll take a look at what's going on between the cities and the regions in just a moment. But ahead tonight, a very big show. Tom Panos is here, an auctioneer, and he'll take a look at what happened for weekend auction clearances. He also joins you on Sky Business tonight. We'll go around the grounds, which is a weekly feature here on Property Fast Track. We like to pick, or you pick, a couple of two very different places.
Yes, I have. And Bentleigh in Victoria is one of those places. I find that's a very interesting part of the world in trying to understand the Melbourne market. You get a good indication out of that area as to what the market's like overall. I know they're struggling from a stock perspective, like most of the areas in the cities are. Yeah. But they're a well-established office down there. No, Michael Egan's a chap we're going to chat to there. He knows it very, very well. Then we're going to move across to inner city Sydney of Dulwich Hill, of all places, to Angelo Lofitis. We're going to talk to Angelo about that area there as well.
Now, Charles, since I saw you last, I won lottery.
Oh, did you?
Yeah, a big ball fell in through the lounge room. Just dropped, $2 million in my lap. I thought, you know what? It's time to buy a holiday house.
Not as much as what I won. I got an email from somebody in Africa. And I did, and they even used my surname and another relative, and apparently I'm going to be splitting $20.5 million, so 50-50. So go figure. Yeah, let's talk about holiday houses. You could probably
buy a couple of holiday houses. So the reason why I bring that up was, of course, that was a complete lie from us both. Although I don't doubt the fact that you got an email from Africa. I think
there are a lot of people, when Kevin Rudd gave away all that money, there are a lot of people in Africa who are thinking to themselves, hey, because some of them worked in Australia, they said, listen, we developed these scams, we're not going to respond to this email. So I think there might be some money sitting out there from Kevin Rudd days too.
So we'll talk to Chris Gray tonight. So look, I figured that anyone who can afford a holiday house is a rarity, but good luck to you if you can. So we'll find out, is it a good idea to buy a holiday home?
Great, okay.
That's coming up. We'll also take a look at what happened with vacancy rates and rent movements across the week, and taking your phone calls to 13 12 83. Now remember that right now we are running a fantastic promotion. Have your say to win 10K. So if you've got a question, you want to share a tip, tell a story or crack a joke tonight with Charles Tarbey, if you go on the air, you're in the draw for $10,000. 13 12 83 is a number. Charles Tarbey here tonight to help you. 13 12 83.
I've got some good stories too, so it'll be interesting to see. We're going to trade jokes.
Yeah, I'm not sure whether you can go in the draw, but please bring your jokes on.
Okay, all right.
Now, I've got an email tonight for you. Click feedback at talkinglifestyle.com.au to send your emails. Hello, Charles. Throughout the Sydney area, there are many high-rise apartments, strata units going up, various levels being built. What would be a reasonable profit margin for these new stratas? New properties are out of reach for first-home buyers. That's from Luke.
What profit?
He wants to know what would be a reasonable profit margin for these new strata units.
Oh, so I don't know is he building these or is
he hasn't specified.
Okay, I'll take it from both angles. I think if you look at it from that point of view, most developers, if anybody is looking to build a small development, small or large development, they always work backwards. Of course, you've got to look at the sale price, and then you've got to factor in a builder's profit, and generally they'll look for 20 or 25% profit. Then you go backwards from there, and eventually you end up with how much you should pay per site for the land, and that's a pretty fixed process. And you're having a bit of a gamble because the market is moving. It could be moving upwards or downwards, so you're factoring it based on right now. But definitely, if you're a developer, I wouldn't be looking for anything less than 20% from a profit margin point of view. Otherwise, you leave yourself way too much risk.
All right, and what about the other angle? Let's say you bought the place and you want to hold it for a bit and then flick it.
I'm not an advocate. I know this sounds terrible coming from a real estate agent, but I believe people should buy and keep as much property as they do. Now, my colleagues are going to be having a go at me about this because we all need stock for sale.
Yeah.
But, it's the cycle thing. And again, I always mention my daughter bought a property 10 years ago and she sat there for quite some time without any capital gain. Then in the last 2 to 3 years, she had massive capital gain. So it's not how much you make out of it, it's how long you stay in the cycle to make sure you get the absolute maximum potential you can.
Hope that helps you. Luke in New South Wales, 13 12 83 is the number tonight for Charles Tarbey, or send an email via talkinglifestyle.com.au. Just click on the feedback icon. Now, Charles, let's take a look at cities versus regions. What's going on? There's some really strong regions in this beautiful nation of Australia. I know a couple that I like personally. Orange is one of them, Bendigo, Ballarat. I really like Toowoomba, for example. What's happening between the cities and the regions?
Yeah, I think that, again, it's just been something that we've been touching on for quite some time. We've talked about this a lot, Nick.
Yeah.
The fact that the capital cities, if they go up in price, then it starts to move out. The wave moves out and eventually it gets to the regional areas or country towns and so on. And a lot of people miss that. And they're sitting in the middle of Sydney going, I can't buy, or Melbourne or Brisbane. And then all of a sudden you look at these reports, and we've been looking at the proportion of loss making in terms of pain and gain that CoreLogic put out. And as I mentioned, 9.6% of people lost, but a significant number obviously made money. And what I've noticed is that the regional areas, the losses in the regional areas have started to drop over the last 3 or 4 years, when the losses in capital cities, combined capital cities, actually started to increase.
Okay.
So you can see that there is definitely still movement in the regional areas, and areas that I think people should look at very seriously. Your capital growth isn't as dramatic or as rapid as the capital cities have been, but it does follow suit to some degree.
All right. Which of the regional areas would you recommend? What have you zeroed in on?
I've always liked the Central Coast. It's not so regional nowadays. Newcastle. I think the areas out Bathurst Way, Goulburn Way, Orange Way, going back down to the Melbourne areas when you're looking at going out through to Bendigo and back down to all the way down to oh my gosh, I've forgotten. Geelong.
Yeah.
It's
good surf and good Pinot Noir.
Not a long way away, but I mean, getting there from one side of the bay to the other can be a bit difficult.
All right. And some pain felt by people in Darwin and also
massive,
Perth again.
Yeah, and that was the thing. I think we all expected that, but if you look at it more significantly in the last couple of years, the Darwin market compared to, say, the Canberra market has had a massive loss over a period of time. Up as high as 35% of people in the Darwin region lost money on a real estate transaction. And in Perth, it's just over 20% of people in that marketplace have actually lost money on real estate over that last period of a couple of years.
Okay. This CoreLogic data, which came out for March quarter 2017, as you said, demonstrates that 9.6% of folks in real estate have lost money on selling again. Is that a different figure to what you've experienced before? Is it a new high, an okay low? What is it?
I think that the number, well, particularly in those areas that we've just mentioned in Darwin and Perth, that was expected due to the mining boom. I think that a lot of people would be surprised, actually, by the fact that 9.6% of people lost money, given the fact that the market has gone crazy over the last few years. It comes as a bit of a surprise to a lot of people. I think, again, as I mentioned at the start of the show, it could be circumstances. People's circumstances may have changed and may have lost their work. But again, a lot of it relates back to those regional areas in terms of mining. Mining has really had an impact on a lot of those areas. Some of the best capital cities across the country in the last year on year, of course, have been Sydney. It's 12.2% increase year on year, which is massive. Melbourne has been the one that we've been driving very hard lately, and I think a lot of people haven't been listening. They've been sort of putting their money up in southeast Queensland, which is now starting to move. But if you go backwards, the Melbourne market has 17% returns on their properties, but a 13.7% increase in price year on year, outperforming Sydney.
Okay. What about Adelaide?
I love Adelaide. It hasn't had the massive growth. It went negative for a little while, but it's had an overall yearly increase of 2.4% year on year. Last quarter was down 0.2%, not a lot, for the quarter, but for last month it dropped to negative 1.7%. So something to keep an eye on, because the capital cities like Sydney and Melbourne still actually had growth. So did Canberra have growth last month, when everybody was talking about the top of the market. You and I talked about it going back in May, June, when people were saying it was on, it was over.
Yeah.
Well, there's been increases since, and so too are the clearance rates, demonstrating that we're increasing in many areas in our clearance rates over the last few weeks.
Charles, you've been around property long enough to know that cycles exist, and you've identified them, no doubt. End of last week, Prime Minister Turnbull was talking about how we ought to brace ourselves for possibly some rate rises.
Yes.
So what should we be preparing for, do you think?
Well,
given that you've seen cycles before.
Yeah, a lot of people trying to throw water on that comment, but I do think it's an important comment to pay attention to, because the interest rate movement, albeit in modest increments, creeps up on you. And going, again, something that I've been on my high horse about for a while, you go from 4 to 6, that's a lot of money, a lot more money every month you're paying in repayments. And I don't think a lot of people have worked that out yet. It may only seem, it's 2%. If it goes from 4 to 6, which it can do, and if you put the base rate at 3.5, then interest rates will hit 6+%. And that's a significant climb compared to what people are accustomed to paying today. Now, they're saying that salary increases are not out there. So either people's wages are going to be, their living is going to be impacted severely. They're going to have to change the way they live, because if their wages haven't increased and their repayments go up dramatically, it could be a bigger pain and less gain in the next time we look at that report.
So it's probably a good time to be pretty prudent. Maybe go out and shop around for a new home loan deal. There's still some very good rates which you can be fixed at.
A lot of people are doing that. Yeah, a lot of people talking fixed. Had one young guy talk to me today about his property. He's bought off the plan and they're not far off settling. He said, I should go fixed. Everybody says fixed. I said, look, you don't know what's going to happen. So my recommendation to you is take a portion fixed and take a portion variable. And that way, if you've got excess money, you can actually, pay down your mortgage, so that in a year's time or 2 years' time, if things change and you need that extra money, you can always call back on it again.
There you go. There's some good general financial advice tonight.
I can't give you financial advice.
You can't.
But I can't even give myself any.
But when it comes to real estate, Charles Tarbey knows his stuff. Property Fast Track here tonight, 13 12 83. Remember, if you get on the radio tonight with a question for Charles, or maybe a story you want to share about your experiences in real estate, you're in the draw to win 10K. Have you say to win $10,000. Nick Bennett and Charles Tarbey tonight. There are some great advantages in being the world's largest real estate company. For a start, your Century 21 local office uses the best technology and knowledge base in the world. Combined with the fact that each office is independently owned and operated, your local Century 21 agent knows your city, your suburb, your town and your street. It also means Century 21 agents can offer a huge range of resources and experience, including information from over 300 offices around the country. It's no surprise Century 21 is the fastest growing real estate brand in Australia. Buying, selling or looking for a new home to rent? Contact your local Century 21 office and find out why they really are smarter, bolder, faster. Visit century21.com.au. Talking Lifestyles, Have Your Say to Win 10K is on. If you get on the radio, then you could be in the running for that in 2 weeks' time. John and Gary giving away $10,000. Good evening, Joe.
Yeah, good evening. I just want to ask the property guru, as I can call him that. I have a property down the Sussex Inlet is the town, and I'm planning to sell my existing property here in the western suburbs and move into that property. Would I be paying a capital gains tax still on that property if I move into that property? And how long would I need to stay there to eliminate that capital gains?
Joe, is this? Are you going to go to live there from here on in? Is that what you're going to do?
That's correct, yeah.
And what are you going to do with your property up? Where is your property at the moment?
Penrith.
In Penrith. That's where you're living right now. That's your place of residence.
And I have an investment property who I had for about nearly 13, 14 years now in Sussex Inlet. which is a growth town. Everybody's building there now. I don't know why.
It certainly is a growth area, and it's expanded all the way down now also with the bypass going through Berry, and that's not far off opening. It opens up that entire area down through there. Joe, the thing is, though, the home that you're living in right now, if you were to sell that and that's your principal place of residence, there is no capital gains tax involved in that. So if you make the Sussex Inlet property your permanent residence, then that too becomes exempt from capital gain in the future if you ever go to sell it.
That sounds good.
So you're doing okay. Penrith is a great area. That's where I opened my first real estate office, Joe.
Was it really?
In Penrith, and I still live there. I live in Glenbrook in the Blue Mountains, so not far away at all. And so it's a great, strong area. Penrith is a massively strong area.
Yeah, you bet. Joe, thanks for your call and good luck. Have you say to win 10K. Joe's in that draw to win $10,000. 7:25 on Property Fast Track. Well, Joe is a good kind of lead into this next story because he's got the holiday pad on the south coast of New South Wales. Shacks, holiday homes, beach houses, log cabins overlooking fly fishing rivers. For some, owning a holiday home's a dream come true. I reckon it'd be an amazing luxury. Maybe you grew up with one and you're excited about raising your family in your own holiday home. Folks who've had these often say that they remember as a kid going to the same spot every year. And it really built lots of fantastic family memories. But is it a good idea to buy one? Or are holiday homes massive money pits which hurt your hip pocket more than they help your heart? Chris Gray is a friend of the show, a leading investment property expert. He's from Your Empire Buyers Agents and is the host of Your Property Empire on Sky News Business Mondays at 9. And he's on board tonight. G'day, Chris.
Hi there, how you doing?
Hello, Chris.
Hi, Charles.
Nick forgot to add that you're the host of Your Property Empire when you're not on holidays, which happens quite a lot.
It's all business, Charles.
It's all business in your holiday house.
Holidays.
Chris, tell us about this thing. It's an alluring thing, the holiday home, especially in a country like Australia.
Well, I think you summed it up right when you called it a luxury, and I think it is a luxury. A lot of people trying to package it up to their partners or their accountants or their friends and say, I've got this great investment property or holiday home that I'm negative gearing and doing all this other stuff. But I think the realities are, it's just like you said, is how many people do, in fact, want to go to the same spot every single weekend or every single month? And I guess in reality, if you are going to rent it out, well, you sure you're not going to want to move in there yourself when the peak season is and people are going skiing or people are on a beach holiday?
Which is when you make the decent dough, isn't it?
Exactly, yeah.
So you're a property investment expert, we know that. Do you think it's a good idea to buy a holiday home? What were your thoughts on that?
Look, I mean, I think the bottom line is it's just like buying your own home. I'm not a fan of buying your own home. I'm a kind of a rent investor myself.
Yeah.
But life isn't purely about money, and it's not about being an accountant and being completely unemotional. So if your biggest dream in life is to own your own home and have a holiday home, and that's how you want to bring up your kids, then nothing wrong with it whatsoever. But I think it's just don't put it into the investment assets kind of box of your personal balance sheet. Look, if it makes some money, then great, but I wouldn't necessarily rely on it.
Chris mentioned then that he's a renter, and what he likes to do is rent where he lives, because he's worked out a long time ago, Chris, haven't you, that renting a property in some of the best suburbs in Australia is a lot cheaper than getting 10 other houses for rent somewhere else, isn't it, from a lifestyle point of view?
And so the main thing, I mean, you could probably use the same philosophy for holiday homes as well, is if you work out, and especially if you're getting in the luxurious ones, like the ones over a couple of $1 million, the chances are the rent return on them isn't going to be as much as actually owning it, paying all the strata fees and the upkeep and all the hassle and all the rest of it. And so my thought process is I'd rather buy an investment property in somewhere like the inner city, which is nice and consistent growth, that doesn't go up and down with the economy and the weather and things like that and mining. So get consistent returns on that, and then use that money to then go and rent my holiday home wherever I want it, whenever I want it, and I can just chop and change depending on what I want to do.
If I did buy one, I might use it for maybe a month or two of the year. Is it then hard to find tenants for those other remaining months?
Well, look, if you're in a nice place and you've got a nice property and it's in a good location and ticks all the boxes and it's clean and well maintained, then there's no reason why you couldn't rent it out all the time. And certainly with the advent of Airbnb these days, it's a hell of a lot easier. And what's been really good over the last 6 to 12 months is there's lots of companies that are set up as Airbnb managers. So before, if you've got a property all the way down the coast, how are you going to go and clean it afterwards? How are you going to get the keys to the people that are renting it? Whereas now there's lots of companies that actually do it all for you. They obviously charge you a fee, but the chances are you might be getting double the rent that you might otherwise be getting.
Chris, seeing that when you look at the buyers in major capital cities, they're sort of mortgaged to the hilt with the way prices have been. Are you noticing that the holiday homes are less popular now because of affordability?
Well, I don't think any of my clients dare to talk to me about holiday homes, so if they have got them, they probably wouldn't tell me anyway. But I think that the main worry is when we had the GFC, that is one of the first types of properties that will get cut straight away, and that's the thing that could be half price overnight.
Yeah, right.
So when people are doing it tough, then they're always going to pay their own mortgage because they obviously don't want to be kicked out on the street and they don't want the neighbours to find out. But if they've got a holiday home and they've got to let that go, then people are happy to let those things go. And that's the thing is people will just dump it quickly and take a low price. And so if you're holding there, then there could be cheap rentals or cheap properties for sale, which is dropping your price as well.
They've been the sort of properties, if you and I talk on a weekly basis, of course, Chris, and we've been talking about the fact that holiday homes, probably from up until about a year and a half ago, would have had potential of substantial growth because you could get some really lovely waterfront properties up and down the coast of Australia that people had dumped over a few years ago.
Oh, exactly. And I've just come back from Europe a couple of weeks ago, and over there you can get a castle. So for maybe about $1 million, $1.5 million, you can get your own castle with probably 20 bedrooms and acres. But for those kind of holiday homes, international holiday homes, they're a serious liability, and it's going to cost you a hell of a lot of money to look after them.
Chris, I'm going to put you on the spot here, so I accept you may not have an answer to this, but what do you know about sort of more humble pursuits when it comes to, if you like, a holiday home? You know, a cabin in a van park, or maybe sharing a ski lodge or some kind of timeshare setup. Is that a good thing to do with your money?
Look, I think whether it's $1 million one or it's $100 or $100,000 one, effectively it all fits in the same box. We've got part of my family's in New Zealand, and they've got a holiday home that's pretty much a caravan in the Coromandel, which probably Charles might know, and it's probably worth absolutely nothing. And I think all we've paid for 10 years is bills. So it doesn't really matter how expensive it is. But again, if it's going to be cheaper, the chances are it's going to be even more remote, which means even less people are going to necessarily want to go there.
All right, so maybe that wasn't a good one for your mum and dad, but let's say someone's had the opportunity to buy a good holiday pad, Mornington Peninsula or New South Wales South Coast, or maybe in the nooses of the world. What's the capital growth like on a holiday home in those spots?
Sure, look, it's still going to be volatile because almost by definition, the local industry is tourism. Quite often there won't be that many other industries supporting it. And so in the good times, sure, yes, it will rise and it'll get all the emotional money, which is what the real estate agents want, and so you can get top dollar if someone falls in love with it. But again, in the bad times, that's when it will drop by even more. So I think nooses at times, the value of property there has been absolutely horrendous, like for a 60 or 70 square metre unit into the millions. But again, if the tide turns, then unfortunately it won't be as good.
Yeah, a lot of Southerners, a lot of Melbourneites love that area and buy that area, and of course they've had that capital growth in Melbourne, so they've been able to push the prices up in Noosa.
And so I think it's probably a thing like boats. You need a mate with a nice holiday house.
Well, Chris, we could borrow a boat that you might have access to, I think.
Exactly.
Yeah,
so
there you go.
I'm certainly into the boatings, and so I do the fractional ownership.
Yeah.
So I own like an eighth share of the boat, and the thought is, you're not going to use it anymore, so why only pay for an eighth? And the same thing could be for holiday homes, which you mentioned before. So if you are going to do it, why not get four mates together? Again, do it properly through a lawyer to make sure that everything's documented. But yeah, if you do a four share, probably a week a month is as much as you want to do anyway by the time you do all the other things.
Chris, just finally, because our caller before you raised this issue, I think, some folks use transition to their holiday home when they retire. So perhaps they've juggled having two homes, then they flick the family home to make their holiday home the home moving forward. What do you think of that idea? Yeah,
so look, tax is always a secondary thing to these things. So the main thing is you should do things because you think it's going to grow in value or you're doing it emotionally. The second thing is then get the accountants in to see if you can tax plan. Obviously not to avoid tax, but to minimise your tax. And there's things like 6-year rules so that potentially you can move out of a home, move back in within 6 years, and it's still capital gain 3. But again, is with some of these things, you can only nominate one property at one time in your life. So again, you could try and play the system of when one market's up and another's down. But in reality, look, it's not worth doing. Just buy your investments. If you want to hold at home, have some fun. If you save a bit of tax, great. But it's not the purpose of what you're trying to do.
Chris Gray, thanks for your time. You on the telly tonight?
Yeah, got to prepare and put my hair and makeup on and be on screen in an hour and a half.
You haven't got much time left if you have to do all of that, Chris.
90 minutes should do it. Thank you, Chris. Chris
Thanks,
Gray.
Chris.
He's the host of Your Property Empire on Sky News Business Mondays at 9. Charles Tarbey will be there as well this evening. So too Tom Panos, who joins us later in the show, talking auctions. Yeah, great to be here for this Monday night. Nick Bennett with you and Charles Tarbey taking your calls on all things real estate, 13 12 83. Remember, if you make it to on air tonight, if you hit the radio waves, you're in the draw to win 10K. Have you say to win $10,000, 13 12 83. So we go around the grounds, and tonight we're going to head off to beautiful Sydney. It's always very interesting to get a snapshot of a particular region and learn a bit more about the area with the help of a boots-on-the-ground local expert. Tonight it's Angelo Lofitis from Century 21 Dulwich Hill. Good evening, Angelo.
Oh, g'day, Nick. How are you?
Going well, thanks, mate.
Hello, Angelo. Thanks very much.
How are you, mate?
Good. Thank you very much for coming on board. I've been watching your activity out there. What a great area. Dulwich Hill sat quietly for some time, didn't it?
It has, definitely, Chaz. It's been changing in the last couple of years, though. We've definitely seen a very different mix of people coming into the area, and they've brought a lot of interesting cultures and cuisine and coffee shops with it.
So tell us about the makeup of people there now, your new buyers. Are we looking at more families, for example?
We're definitely looking at young, starting and growing families. Typically, a lot of them in that 30 to 40-year-old range.
Yeah. Okay. And no doubt the light rail has been a big kicker.
The amazing transport infrastructure in this area is just second to none. We're the only suburb that has access to trains, buses and light rail.
Wow.
And being that diverse cultural community that we are and the young influence, they really want that access to infrastructure. So it's very attractive to that clientele.
Now, most of the properties are, I remember spending a bit of time there as a young guy, and all the semi-detached houses all through those areas. And I often wondered, when we talk about the issue we have with housing in Australia, that medium density, when they talk about suburbs further out west and in other developing areas, they say, the blocks of land are too small. But people have managed to exist on blocks of land that are 200 square metres in size, and that's pretty big in some of those areas.
And it's ironic because a lot of these people that are coming into these properties that are 200 or 250 square metres are looking around and thinking, geez, I can really stretch out here in comparison to suburbs like Surrey Hills and Newtown and any of those inner city suburbs. So I think it's just it's relative to your current experience or your current situation, and I think that there's good value to be had in that small single front market, being around that 1 to 1.5, depending on condition and whether it's freestanding or not.
Angela, what attracted you to the area?
Look, I married into the area. I'm pretty much, and my family had property agencies in this area since the 1970s. Being that I have a Greek culture, they were prolific. Marrickville and Dulwich Hill were prolific with Greeks.
Yeah, certainly Marrickville was.
Yeah, absolutely. And Dulwich Hill had that influence just because of its proximity to Marrickville.
And just finally, how do you see the outlook for the next year or two, Angelo?
Look, I'd say that between the beginning of this year and now, we've seen a very steady market. There hasn't been a lot of stock come on market, so anything that's come on is typically sold. I think moving forward with the amount of stock that's coming on at the moment in this area, we're probably going, despite that there's a lot of stock coming on in the area, I think we'll see a little bit of growth because there's a lot more buyers out there. There's activity with the stamp duty reforms, and we're seeing activity in that sort of space as well. So I think people that need to sell in that space will upgrade to a larger size property, and I think it all sort of goes hand in hand from there. So I'm confident we're going to have a good end of the year between now and sort of definitely through spring and into November.
Oh, good. No, yeah, look forward to chatting to you a bit more about that throughout the year, Angelo. Thank you very much for taking the time to come on.
Angelo Lofitis from Century 21 Dulwich Hill in Sydney. Cheers, mate. And Michael Egan now from Century 21 Bentleigh in southeast Melbourne. Good evening, Michael.
How are you, Nick?
Good, thank you.
Hello, Michael. Thanks for taking the time to chat to us tonight.
Pleasure.
Tell us about your area. Where exactly are you and what's unique about Bentleigh?
Okay. Bentleigh is about 12.5 kilometres from the CBD in Melbourne, heading down towards the Mornington Peninsula. And probably most people would recognise some of the surrounding ones, like suburbs like Brighton, which has the iconic beach bathing boxes along there. I think everyone's seen photos of those.
Yep.
So we're very, very close to the city, but we're just far enough to have a little bit of a lifestyle as well.
What would you say the median price is for that area there, Michael?
Just looking at our friends at CoreLogic, median prices over the last 3 months for Bentleigh has been about 1.44 million, which is pretty good. Villa units, about 830,000. It's interesting, Bentleigh sits in the postcode 3204, which also has McKinnon and Ormond, parts of Ormond. And McKinnon's median there is 1.7, so that's doing really well because of the school there. Well,
young Sam was just asking me, when do I think Melbourne might get to 1 million median? I said, probably not in this cycle, but certainly in your area it has.
It has already, and another suburb, Bentleigh East, I remember 28 years ago when I got involved, you could buy a weatherboard there for 100,000 and bricks veneer for probably 110, and they're both now getting well over $1 million.
Gee. So what kind of buyers are coming in, Michael?
Mainly families, Charles, and a lot of those will be people who have owned a property. We tend to get a lot of people who might have bought as a single or a young couple, bought a little two-bedroom in, say, St Kilda East, Elwood.
Yep.
And once they team up and decide that kids are on the way, they're looking for the larger blocks, and of course it's very expensive, as you'd know, in those areas, and they gravitate down our areas for the larger blocks and the period style homes.
Do you see the price movement still in an upward trend, Michael, in that area?
Charles, very much in our area at the moment. Even the prices we're getting now compared to 6 months ago are far higher. I think that's a lot to do with just the sheer lack of stock.
The clearance rate in Melbourne on the weekend just gone was 79.4%. Sydney was the other way around, 74.9%. So 79.4% for Melbourne, beating every capital city in clearance rates. And Melbourne puts more property to auction than any other capital city. So there's your best indication of what's happening.
And I'd say about our area too, Charles, there's been plenty of times where we've seen the clearance rates at 75%, but if you look at Bentleigh, Ormond, McKinnon, Bentleigh East, you might find it's closer to 85, 90%.
Yeah.
Now, Michael, beyond the fact that you're very close to Melbourne CBD, just 12 k's away, what are other reasons why I might want to buy in Bentleigh?
The big thing there, I think, going back to the early 1900s, the infrastructure that the town planners and all put in, beautiful big wide streets, lots of street trees, which is really good. The style of property, there's some beautiful examples of solid brick and timber California bungalows and a lot of really nice Art Deco homes in the area.
Not to mention a couple of golf courses, Yarra Yarra and Huntingdale, not to mention those, of course.
If you can get onto them, Metropolitan and Kingston Heath, and I've played on all those. Royal Melbourne, but you don't get on that unless you know someone. But, yes, some beautiful courses.
And forecast for the next, say, 6-12 months, what do you reckon, Michael?
I still think it's going up, Charles. I think lack of stock. I still think, I just know with feet on the ground that my demand is far bigger than the supply I can do, or any of the agents can do around here. And we're seeing multiple bidders still at auctions. We're seeing a lot of off-market stuff happening, sales occurring off market for really healthy prices. I don't see it stopping, and I think last year we're at least 10% more. I still think we've got 10% over this year as well.
You manage a lot of properties for rent there, Michael, in your portfolio. What's the vacancy rates like for you there?
Very low, just over 1%, I think, at the moment.
The vacancy rate for Melbourne over the last couple of weeks has sat at 0.92%, which is the lowest across the country. Lowest across the country.
I'm fairly close. You hit me with one off the top of my head.
You're right on there. I asked you first.
Sounds like a good story all round. Michael Egan, thanks for your time.
Thank you, Michael.
Thanks, Nick. Thanks, Charles.
It's a pleasure, mate. He's from Century 21 Bentleigh in southeast Melbourne. Property Fast Track tonight. Charles Tarbey here taking your calls on 13 12 83. If you get through tonight and get on the air and give Charles a story or a question, if you want some expert advice on property, not only will you get that for free, but you'll go in the draw to win $10,000. Have you say to win 10K on 13 12 83. Trevor Long here tonight after 8, 13 12 83, taking your calls on all things technology, 13 12 83. Another weekend, another chance for buyers and vendors alike to make the most of things. And as we work our way through the winter months, the weather and the market shows signs of heating up. Let's chat with Tom Panos, an auctioneer and a 2-decade veteran of the business. Tom knows what's going on. Good evening, Tom.
Hello, Nick, and hello, Charles.
Hello, Tom.
Now, Tom, let's start with Melbourne, recording a clearance rate of 74.9%. Call that 75, shall we, on Saturday. More strong signs from a bullish winter market.
Yes. I'm just, I'm talking to the agents, and they're saying to me that Melbourne is as good as they've seen it. So, look, I've got to tell you, I'm gobsmacked. As I said it before, I did not think that the marketplace would be the way it is at the moment. There was everything in the world suggesting to me that the party was over. This market is a lot more resilient than I expected. Charles, you heard me saying that I've accepted the party's over, and I actually went out there and I was training all the real estate agents to get ready for this correction. And there's a possibility I overstepped the mark because...
it's still that shortage, isn't it, Tom? I mean, by the time the clearance rates were calculated over Sunday in Melbourne and got to Monday, they hit 79.4% in Melbourne alone. So you can imagine the agents down there, they're going, well, what correction? What correction?
Yeah, they're actually, guys, most real estate agents in Melbourne at the moment, all they do is they spend Monday to Friday out there looking to try and convince people to put their properties on the market. They're actually not doing a heap of work with buyers because they simply don't have a lot of inventory, stock, listings, call it what you like, to actually show them. So most of their activity is out there, and the word that's used, Nick, is prospecting for stock.
Yeah.
And that's what they're doing. So, I can tell you, there's a lot of real estate agents that are really pleased that spring's coming along because they're keeping their fingers crossed that they're going to be called out by prospective sellers to put their properties on the market for September, October, November.
Tom Panos here tonight. Now, Melbourne recorded that median auction price of $716,800 on Saturday, lower than the $740K over the previous weekend, and 2% lower than the $755,000 recorded over the same weekend last year. What do we read from that?
Look, Nick, the one thing I'm going to say is that's not anything to look deeply into because what actually happens is if there is a major sale in a capital city like Melbourne or Sydney and you have a transaction that, sells at 20 million or 19 million, what actually happens is it really distorts the actual numbers. So all it takes is one major transaction or one lack of a transaction to actually alter it. What you're really looking for is a trend line of consistent behaviour over a period of 4 or 5 weeks. So I don't think that there's been a major change in pricing over a 7-day period.
Well, Tom, let's move to Sydney, where the clearance rate rose again, 4th consecutive week, continuous week. Strong signs, and from the strongest market in the country, or it has been for a long time. What are your views there?
Charles, this was the first weekend that I can recall that I actually had no auctions because all my auctions, so I had no auctions on Saturday. All my auctions scheduled, I had a whole day of auctions scheduled, were sold prior, or there was one or two that were actually withdrawn from sale.
Wow.
I spoke to the agents that sold prior, and they said they were happy with the money they were getting for their vendors. So, again, Charles, it's a classic case of no stock. A lot of these people, by the way, that are selling now with the hope that they're cashed up and they're ready to buy in September and October when there's more property on the market. So,
and you know, Tom, we hear a lot of these stories, and people think, oh, gee, the real estate agents are making a killing. But as you and I both know, a lot of real estate agents are not going to survive, and they're going out of business because they've got nothing to sell.
Interesting.
Well, yeah, Charles, I can tell you that there's a number of real estate agents who have gone into cost reduction mode in their life, and that includes holidays, school fees, and also in their running of their office and the kind of marketing that they're doing, because this lack of turnover is simply affecting their income, but they haven't been able to alter their expenses for a period of time, and now they're going into debt reduction or cost reduction for purposes to keep going.
Gee, that's interesting, isn't it? So things are still selling, can't get enough stock, not good for the agents, still tough times for the buyer.
Yeah, well, Nick, the big winner is the seller of a property that is cashing in, because, as Charles will tell you, just because the marketplace is hot does not mean it's good for a real estate agent. Real estate agents get paid on turnover. Buyers win on affordability, and those two factors still favour heavily the seller in the marketplaces that we're talking about. So all I can say is, if you're one of the lucky people, and I hope you are, Nick, and you've bought real estate, and I know Charles has, you're probably in the category that is in the good category at the moment.
Well, Tom Panos, thanks very much for your time tonight. We can catch both you and Charles Tarbey on Sky Business News tonight from 9 o'clock. Thank you, gentlemen.
Thank you. Thanks, Tom.